All right, so this is the steps that I take, that I go over when I have a meeting with a client, either before they're starting their business or if they are already taking a plunge. And even if they've been doing it for a while, these are the kind of things I want to review and go over and say, okay, have we done X? Have we done all of these? So the first thing I'm going to talk about is that we want to review their business setup. And what's that? A lot of them say. They will say things like, wait a minute, I don't know, I'm just driving people around. I didn't know I was in business. I've had people who, they do, it's not so much anymore, where they get paid for a couple weekends to deliver, the yellow pages for some of our younger clients. These are these things we used to have, where you would go around and it would have all people's names and addresses and phone numbers in it. If you haven't heard of that, just ask your parents, and they'll tell you all about it. But they would get paid $700 or $800, or maybe a weekend, and so they come up with $5,000 or $6,000. And I say, well, you're self-employed, or you're in business for yourself. And they're like, no, I'm not. I got hired to do this. And so I think it's educating you with your client that you are a business, and the structure and the entity that you have can have a big influence on how much you're paying in taxes. These are the different entities that are subject to self-employment tax. All right, so the first one is a sole proprietorship. Now, this is the default entity, that if you are getting a 1099 and you haven't set up anything with the state, whatever your state's requirements are as far as being in business, or if you're just getting paid cash, or however you're just one man, one woman who is in charge of your business, you are considered a sole proprietor. And that is, it's the default. If there's someone else who is working with you, you are in a partnership. It could be 2 or 3 people. A partnership is also subject to self-employment tax. The tricky part there with a partnership is that unlike a sole proprietorship, you have to file a separate tax return for the business first, or in this case, the partnership, and then it's like a pass-through entity where the money passes through the partnership and then distributes to the 2 partners for them to file on their own personal tax return. The next one would be a sole or multi-member LLC. Now, this is provided that they have not elected to be treated as an S Corp or a C Corp, which there are opportunities I'll talk about in a little bit. But if you do go to the Secretary of State for your website, at the website, or if you go down or to the actual office, or you fill out the application and you become a LLC, you are still a sole proprietor and you're subject to self-employment tax. If there's multiple members of the LLC, then you're defaulted as a partnership. So basically the difference between this right here and then the partnership and the sole proprietorship is, this one is you've gone online and you have registered with your state's governing agency to make sure that you are legit, so to speak. And this is something that I would say a lot of people do, but there's also a lot of people who don't. And I can sit down with my clients here and I'll say, look, how do you want to do this? Who else is involved? Is this just you? Are there other people? Are you and your spouse doing this together? And that's a good, it's a good conversation, I think, to start with, to figure out where the client is with their business and where they want to go and how they're going to grow. Dealers in commodities, I'm not going to talk too much about this, but that is another subgroup that is. And then farmers and some fishermen. So if you're doing something called a Schedule F, I have a client who has a pig farm. Now, they don't make a lot of money on that, and he was in a similar situation to Mr. Roose Bolton, who, he used the business to take a major loss for 2 years in a row, and then was told, well, you can't just keep taking a loss every year. And so after he was audited, he realized that, okay, well, I guess I have to, I can't just be using this to lower my regular income for my W-2 job. So those are all the entities right there that if you have something like this or one of these different entities, you are subject to self-employment tax. Now, there's also entities that are not subject to self-employment tax. And so if you can either change or be taxed in one of these ways, that's one way to avoid self-employment tax altogether. One of them is the C Corp. That's probably, that's one of the bigger, corporations. S Corp is something that you'll hear about, you've been hearing about in the news a lot. It is a pass-through entity that has one or more members of that are on the S Corp that are going to be an owner, and in some cases also an employee of the S Corp. Limited liability partnership is not something that is really I would say on vogue right now. It's something that I think that multi-member LLCs have kind of taken the place of limited liability partnership, but they are still something that you can do. You can also be an LLC that is electing to be taxed as an S Corp or a C Corp. There's a Form 2553, which is the example, and I have that form on the bottom here of this slide. That is something that you can say, all right, look, I want to keep my limited liability corporation. I don't want to change everything. I don't want to start a new company. I like not having to have board meetings. I don't want to have meeting minutes. And I don't want to have shares. It's just me, and I'm not going to hold a board meeting with my dog and my cat and my 3-year-old son. So you're going to file this form to say to the IRS, all right, I want to be taxed as an S Corp. And when you do that, you have to put yourself on payroll. And then you are taxed in 2 different ways. You will get a W-2 from yourself at the end of the year, and that'll have your taxes taken out, your Social Security, Medicare and things like that. You're going to be paying all that, but you're going to pay it through the year on a reasonable salary for someone who would do the work if you were to hire them to do that. Then you also get a K-1, which is going to give you income for being the owner, so to speak. And so maybe it's like 50-50 or a little less, little one way, 60-40, where you're going to have a distribution which is going to be taxed as ordinary income, and that's not going to be subject to self-employment tax. So that is definitely something, and I'll talk about that in the end a little bit more. But I think a lot of people, especially with the new 2018 tax laws coming up, that are going to encourage a lot of people to take this option. All right, so the next thing is that I really am going to, and usually I have like a startup package fee where I will charge someone a certain amount, and I'll say, all right, this is what you're going to get with this. And the first thing is going to be that, we establish them as an LLC. But then I'm going to give them those articles of organization and say, okay, you're going to need to take this, and you're going to need an EIN. An employer identification number, which is going to be necessary for you to get a business bank account. I have heard some banks where you don't need to have an EIN. You can do it through your social, but I think for, one of the biggest things is separating your business income from your personal income. And I think this EIN is just another way of making sure that you're moving in that direction. So I will set up a LLC for them. I'll make them apply or, get them set up with an EIN, and then I'll send them to the bank where they're going to want to make sure they get a checking account, which is a business-only checking account, and a savings account. Now, the bank that I work with, they gave me a free savings account when I opened up my business that went with my free business savings account that went with my checking. But stupid me, I didn't use it. I didn't say, I'm not making enough money. I don't need a savings account. So I didn't put anything in it, and they eventually took it away. I had to go back and reactivate it later on when I realized that the savings is going to be important, not only just to put money away for your business, but it's a great way to put money in for taxes and, to make sure you're covering yourself when it comes to self-employment and setting up payment quarterly taxes, or later on if you become an S Corp or, you're having payroll taxes taken out of that. And that is why the reason this is so important is because you want to make sure there's a separation of your business income and your personal income. I've had so many clients who they come into me and they come at the end of the year, they've done this first year in business, they've started a landscaping company, and I say, okay, well, what are your expenses? Well, here's my bank account statements. And it's like, you've got your grocery store receipts, you've got your Netflix account, you've got your supplies from Home Depot, and nothing is organized. And it just makes things a lot more complicated when someone's trying to come up with expenses, as well as figure out, wait, was that just money my mom gave me? Or was that something that I actually, I earned from a client? So this is all about organization and making it easy for you going forward. Basic bookkeeping. I have had the client come in with a plastic grocery bag full of receipts, and they're like, I don't know, most of my business receipts are in here. And that's the extent of their quote unquote bookkeeping. You want to talk to them about how, okay, if you do have expenses, then one way that I would suggest is, you want to have a business credit card. If you're good at paying your bills and paying on a credit card every month, you might as well get some of the rewards and the benefits that go along with that. Plus, if you're only using that credit card for business purposes and all your expenses are on that business, it's much easier to go through and find an expense report. And there's some really cool tools that that these credit cards and checking accounts have to track your income and to categorize your expenses. Like, it can be simple, like I told you about the mileage app, where I just swipe right for business, swipe left for personal. There's, there are apps that come with a credit card for a business where you just, you select your categories and you say, okay, this is for client entertainment, okay, or this is for supplies for my store. This is for a business expense. As far as legal expense, or my accountant, or paying for my taxes, things like that. Then I want to make sure that they are calculating their monthly profit and loss. They don't need to go out and buy QuickBooks or, a fancy program. It can be as simple as just making sure they have a monthly amount of how much they're making, drawing in gross income versus their, versus their expenses. So they come up with their net self-employment income. And the self-employment income, that's where you're going to figure out, it's your gross income less your expenses, using all the tools you have, whether it be an Excel spreadsheet, or if you're using, an app. There's some people have apps on their phone. They're always out on the road. I have a garage door installer who he does everything from his phone. He does invoices, all of that. There are tools out there that can help you calculate this. And then I always like to sit down with my client and review the Schedule C and give them a worksheet that they can walk through, and they can see, all right, advertising. What kind of things go in advertising? I'll talk to them about and say, look, do you have a website? Do you have business cards? Do you do flyers? Do you pay for a monthly mail or anything like that? I want to make sure that they understand all the different categories that are available to them. And sometimes by going through that Schedule C, the light bulb goes off and they're like, oh, what? I didn't even think about that. Yeah, I have a website. I paid $5,000 for that. Or, things, obviously they're usually more aware of that, but there's a lot of times where people come into a new business and they're so excited. Like I said in the course description, they got that Jerry McGuire. They're like quitting their job and running out and saying, show me the money. Let's go. Let's make money. They don't think about what kinds of things they can deduct that are going to help them. And then don't forget the mileage. I think that the easiest way for people to have some expenses, even if it's after the fact, because with the day of Google Maps and MapQuest and Apple Maps and all those things, you can easily go back and recreate mileage and get people on the right track. And so most people know where they did their jobs and how many times a week they did their jobs. And so you can easily calculate with them right there you can go and calculate how much mileage was used, and then you have the car information. I think a lot of people forget mileage. For certain jobs, they don't realize how much they're driving around. And that's one of the, if you're not depreciating the car or, using actual expenses, mileage can at least help you. If you are using those actual expenses, mileage is going to tell you the percentage that you use your car for business purposes. All right, and then so you want to calculate estimated taxes. And the way to do this, to be on the safest side, is 30% of profit. And normally when I say 30%, people start freaking out. And this is definitely a conservative, and you probably aren't going to be paying that much in taxes. But if you figure, all right, well, I'm in the 15% tax bracket, and that's why it doesn't apply to everybody. But if let's just say most people are in that 15, which is now 12%, whatever it is, and then the 15.3% for self-employment. If you want to be safe and you want to make sure that you're at least putting more in, now it's not like the old school economists where it's like, you don't want to have any kind of a refund. I definitely preach that you'd much rather have a little bit of a refund. It's not like your savings accounts are going to make that much money, on that extra money that you're, not sending to the IRS. But to be on the safe side, I recommend 30% of the profit. So that's not 30% gross income. So if you bring in $1,000 and only $500 of that is profit, then you're going to calculate, all right, I need to put away about 30% of that $500. And then pay quarterly. Definitely you want to get people in the habit early of, setting up quarterly payments, whether they want to get an TPS account set up where they can pay their quarterly taxes. And the more they can automate it, if possible, where their bank is set up so that 30% of whatever is put in there is put into the savings account, or if you have automatic payments with TPS, any of those kind of tools that are out there, you want to definitely use. And this is just my philosophy. What I, preach is more, you want to pay more rather than less, because if you don't pay enough, then you're subject to penalties and interest and things like that. And that's usually not a fun conversation in April when all of a sudden you're saying, okay, by the way, you've paid all this, quarterly. Now you got to pay another, $2,000 or $3,000, and there's going to be penalties and interest if you don't pay it by April 15th.